Let's do business. 25 minutes is what we have to give you update from the world of business here on Business Incorporated. And here's what we have prepared for you. There are high expectations from the new Chief Executive Officer of Johannesburg Stock Exchange. We'll see some of those on this episode of the program. And Ghana has signed the 5th bilateral debt restructuring agreement. And over in Egypt, it's good news that GDP hits the fastest quarterly growth in 3 years. Welcome to the program. I'm Ini John Meko, and we start as usual from the global oil space, where prices declined after settling around 1.6% lower in the previous session as the market risk premium faded after Israel and Hamas agreed to the very first phase of a plan to end the war in Gaza. So look at the numbers for this afternoon. It's a bit lower than what we had in the morning. So it's now 64, lost the 65 level. It's now $64.41 a barrel after losing 1.26%. WTI is also down 1.25%, leaving the price at $60.72 a barrel. Of course, the Israel and Palestinian militant group signed a ceasefire agreement yesterday, Thursday, and that's the first phase of the intervention of President Donald Trump, in that under the deal which Israel's government ratified today, fighting will cease, they say, and Israel will partially withdraw from Gaza, and Hamas will free all remaining hostages that it captured in the attack that precipitated the war in exchange for hundreds of prisoners held by Israel. Numerous vessels have been attacked by the Iran-aligned Houthis in Yemen since 2023, targeting ships that they deem linked to Israel in what they describe as solidarity with Palestinians over the war in Gaza. On a weekly basis, however, both crude benchmarks were on track to close in the positive territory. Brent up about 1% and WTI about 0.6% so far, after falling steeply last week. And then from the oil space to the metals, see what's happening with the shutdown continuing in the United States. Gold rebounded from earlier losses and was on track for the 8th consecutive weekly gain, driven broadly by political and economic uncertainty, as well as expectations of further U.S. rate cuts, while silver hovered around a record high. So look at the numbers. Now, spot gold is 0.5% in the green, 3,992. And of course, you know, by yesterday it had lost the newly found $4,000 level. U.S. gold is 0.8% in the green, still more than 4,000 at this time. Spot silver 3.7% gain at $50.95. Platinum is 0.22% in the green, $1,660 per ounce, and palladium almost 3% gain in the last couple of hours, $1,498 for both. Non-yielding bullion, we know, is traditionally considered as a hedge in times of broader uncertainty, and the U.S. government shutdown is one of those uncertainty. Multiple factors are also supporting the rally, including geopolitical risks, robust central bank buying. Yes, central banks are back to buying gold, turning the way of gold for their reserve. Even here in Africa, we told you how I believe Ethiopia has joined that league. Ghana is doing very well in that, and so that is all fueling to the demand of the metals and leading to higher prices. And talking about Ghana, the country has signed its 5th bilateral debt restructuring agreement as part of ongoing efforts to stabilize the economy and restore debt sustainability. According to the country's Ministry of Finance, the latest deal was reached under the G20 Common Framework, following earlier agreements with several key creditors. The ministry said that the new agreement or the new arrangement provides significant relief on repayment obligations, allowing the government to channel more resources towards growth and social development. Ghana's debt restructuring is a critical component of its $3 billion International Monetary Fund support program, aimed at reducing the country's debt burden and rebuilding investors' confidence. The government reaffirmed its commitment to completing negotiations with remaining creditors in line with IMF requirement to secure full economic recovery. In Northern Africa now, Egypt's economy expanded 5% in the fourth quarter of fiscal year 2024-2025, and that's up from 2.4% from a year earlier. That's a huge move year on year, marking its fastest quarterly growth in 3 years. This is according to the Ministry of Planning, Economic Development and International Cooperation. The rebound lifted full-year growth to 4.4%, supported by stronger performance across tourism, non-oil manufacturing, and communications and information technology. The ministry said the results highlight Egypt's economic resilience amid continued external shocks and policy reforms aimed at stabilizing the macroeconomy and boosting private sector participation. The Industrial Production Index for non-oil manufacturing surged 18.8% in Q4 full year 2024-2025 compared to 4.7% in the same quarter of the previous year, reflecting a sharp turnaround in industrial activity. Egypt's government credited ongoing fiscal discipline and higher public investment for sustaining the growth momentum. And in Zimbabwe, the Revenue Authority is adopting artificial intelligence in its new 5-year strategy to transform tax administration, integrate the informal sector, and raise the country's tax to GDP to $111.5 billion by 2030. That's the target, $11.5 billion. Last month, the government revised the economic growth rate upwards by 0.6% for the year, translating the GDP at current market prices to $52.3 billion. Zimbabwe is seeking to raise the tax to GDP ratio to 22% by 2030, or the $11.5 billion US dollars. Hence, the taxman is already pursuing an aggressive tax collection campaign using artificial intelligence. So we did tell you how the Johannesburg Stock Exchange has a new chief executive officer. That news broke yesterday. But for today, let's have a correspondent in Johannesburg to tell us expectations that follows this, that South Africa's financial markets, and perhaps what this could bring or mean to the market. Correspondent Innocent Semosa. Hi, Innocent. Good to have you on the program live. And I know that the market is excited about this new chief executive officer. First of all, tell us why there's a new chief executive officer and what we can expect from this new regime.
Indeed, colleague, a very good afternoon to you and our viewers. Indeed, it's been a while, but thank you so much for having me. It's good to be with you once again. Well, perhaps let me give the background of who is this person who's coming in. She's, of course, a current role. She's the Director of Capital Market at the JSE, a role which, of course, oversees the listings, secondary markets, trading across all assets, So experience, of course, over 20 years in the financial markets, including the previous senior roles in the international investment banks. She has more than 10 years in the JSE itself. With education, we do know that she holds a degree in actuarial science from the University of Cape Town. Now, going back to your question, colleague, what can we expect and what are some of her priorities? Likely priorities really includes, and I'm just predicting here that issues around strategic continuity, building and binding from the reforms and vision implemented under, that is Leila Fourie, who is going out next year, and the innovation and competitiveness, already has stated previously that her focus will be on accelerating innovation in the JSE and enhancing its competitiveness standing, diversifying revenue streams. You and I know, colleague, that the JSE's efforts is really to diversify how the JSE earns money, not only relying on the traditional transactions, listing fees, but also the stakeholder relations, colleague. This is the important one because it will help to, modernize the market. including upgrading technology regulations, regulatory networks rather, as we are in a digital era, and perhaps expanding the market's appeal to both domestic and international markets. So a lot is expected from her. It remains to be seen whether or not she is up for the job, but given her experience, I'm hoping that she will do well.
Yeah, because, you know, there's competition going on in markets on the continent. Nigeria is gunning for the best performing this year. And I mean, Jersey has been doing well. We've seen it grow steadily, hit 100 and growing on the 100 level. So I guess she would also be looking at the numbers to direct her on maybe increasing listings on the market, getting more participation, getting more technology and AI, where the youth, you know, can be attracted in the market. I guess this will also, she has a short time for this year though, this will also be her focus.
Yeah, indeed. It goes without saying, colleague. In fact, she faces a formidable challenge, for lack of a better term, as she prepares to lead the Johannesburg Stock Exchange. As it is dubbed, I know this is up for a debate, colleague, but it's dubbed one of the largest, most sophisticated entity in the continent. But again, will she be able to run this through a period of change and really a lot of uncertainty? But while she inherits, colleague, a well regulated and respected institution, the JSE has really struggled with their low trading volumes, declining new listings and intense competition from global and regional exchanges, but also investor confidence remains fragile. And of course, amid the slow economic growth in South Africa, the issues around policy uncertainty and the rise of alternative investment platforms, such as the private equity and the digital assets. But will also, need to accelerate digital transformation, as you've indicated, where in the digital platform, she needs to really strengthen the JSE's appeal to both local and foreign investors, and ensure that South Africa's capital markets remains globally competitive. At the same time, expectations are high for her to promote inclusive, support sustainability goals, and also diversify revenue streams beyond just these traditional trading and listing fees. But in short, colleague, her task is daunting, but pivotal for her to modernize the JSE while really restoring the growth moment, or should I say the growth momentum, and reinforcing its role as a gateway to Africa's capital market. We need it to work because it's one of the best in the continent. So for it to work, it means the success of the continent.
Yeah. Just briefly now, what's the sentiment of the investing public generally? In Nigeria, they say the investing public is just about, I think, about 6% or so of the total population. In South Africa, what's the general perception towards investment, the stock market, and all of that?
Yeah, the perception here, colleague, is that the challenges that are facing the JSE is that a growing number of companies are really delisting from the JSE over the past decade, and a number of listed companies have dropped significantly. This has really reduced market depth and liquidity, making it the JSEs less attractive to investors. So hence I said earlier that she's got a daunting task ahead of her. But the high compliance costs, the limited access to capital, better opportunities in private markets and overseas exchange. So the weak domestic economic growth as well, that has really been a challenge. But over and above, just as a parting shot before I bring it back to you, political and regulatory uncertainty, the uncertainty over government policies, the likes of the land reform, the NHI, the mining charter, concerns about corruption and governance really undermine market confidence. So it does seem as though it's going to be a lot for her. But again, I wish her all the best. And she's leading a structure that is really has it's still intact, for lack of a better term. So we wish you all the best.
We certainly do. We certainly do, Innocent. And we'll see the numbers. The numbers will tell us the perception of our effort. But thank you so much, Innocent, for your time. Thank
you, colleague.
Well, we're staying with the markets now. See the numbers at intraday. We start from Nigeria, where it does seem like that profit-taking that started in early trade today has been sustained by investors. So at intraday, the market is down slightly low, so not so much to worry about. There's the possibility of a recovery before the close of trade. 0.03% in the red, and we're still on the 146. We haven't lost that. We regained that about this time yesterday, so celebrating that in 24 hours. I'm talking about the Johannesburg Stock Exchange, which I just spoke to with my colleague. The sentiments there are not looking so good at this time. I wonder if investors are still sizing up, how the new CEO would cope and what she would bring to the table. So it's not a green one for JSE this afternoon. The Egypt stock market is closed on Fridays, but it closed in the positive. 0.75%. At Nairobi, we have a negative close from Thursday, 0.67%. And from there, we move to the Middle East. Middle East, only two of the markets trade on Fridays. That's Dubai and Abu Dhabi. And both of them are mixed. We see Dubai intraday is in the green, 0.2%, while Abu Dhabi is in the red. The other two markets are closed for Friday, but they closed positive. Saudi and Qatar. We see the Saudi will close 0.21% in the green, then Qatar 0.33% in the green. In the United States market is just a little change after both the S&P 500 and the NASDAQ. We see closed in the red. S&P is also red at this time. But let's join my colleague in Washington, Maria Bird, to give us more details on Thursday's trade.
The U.S. stock market retreated on Thursday as the Dow Jones was down at 0.6%, the S&P 500 fell at 0.3%, and the heavy-tech NASDAQ was down at 0.1%. As many investors are watching the AI investments and also the interest rate cuts that are expected to happen before the end of the year. This has caused the market to buoy back and forth, but there are some skepticism around this as the U.S. is in the midst of a federal government shutdown.
And then we go to Asia, where shares of South Korea's chip maker SK Hynix and Samsung Electronics, they hit their record highs today after a near week-long holiday boosted by a series of artificial intelligence deals. So the fear of, the bubble busting on AI, I wonder where that is. So I hope not to see it. So we see the Nikkei in the red, more than 1%. Kospi almost 2% in the red, in spite of this record highs that was hit by these chip makers. The Hang Seng also in the red at 1.73%. And looking at other markets on that continent, the Shanghai is also in the red, almost 1%. Only India is able to escape the sledgehammer of investors profit-taking this afternoon, this evening in their parts. So we see the Nifty close in the green at 0.40% at 25,284. Let's just slip over to Europe and find out what Chip can tell us about the movement of European stocks this afternoon. Hi, Chip. Good afternoon.
Good afternoon, Ine.
So what are investors doing intraday?
Well, European shares, Ine, are flat, and while healthcare stocks have been losing, banking and auto shares have been gaining. Now, it's also because France is still on the radar for investors here. The expectation is that French President Emmanuel Macron will be naming the country's next prime minister this evening. And of course, we do know that this week the euro has been trading close to its lowest level against the dollar in 2 months at $1.15 for a euro, and that is mostly because of that political crisis in France. And of course, for investors, the government shutdown in the United States is continuing to cast its shadow of uncertainty on markets because, of course, key economic data from the United States has been delayed. But Ini, there has been some positive news on the geopolitical front with Israel and Hamas agreeing to a ceasefire to end the war in Gaza. So it's not all doom and gloom on the markets, that despite for them, mostly struggling to find direction and trading flat today. Yes,
that good news, even though there's the fear of let's see them hold on to those agreements, these two countries, Israel and Hamas, But another good news, I believe, started like 2 days ago, where the World Bank says that the world economy is not doing as badly as they thought after all the tariffs. And now we have the observation of Germany, your government, also seeing a better forecast for the economy.
Exactly. Yeah, the German economy is actually expected, Ini, to grow by 0.2% this year, which is better than the stagnation that had been predicted earlier. And the pace of growth will also quicken next year. GDP is expected to expand 1.3% in 2026. Now, Ini, that is 0.3% higher than had been forecast in the spring. And it is the rare gem of good news on the German economy, but we still have the economy minister Katharina Reiche pointing out that this positive outlook should not obscure the fact that a big chunk of the growth is actually coming from high government spending. And Reiche says that a reform is needed in Europe's biggest economy for it to achieve long-term growth. Now, the economy minister would also like to see lower energy costs, incentivizing private investment by lowering taxes and social deductions, less bureaucracy, more innovation, and a more open market. That is, of course, a long list of reforms that has been the song that has been sung by German businesses for a while now. But the government is now under pressure to deliver on some of that reform because, of course, the German economy has been struggling in recent years, and it's something we keep on coming back to, Ini.
Yeah, that's a long list and a common one for a lot of countries. But is the German government able to manage to deliver at least a few of them?
Well, Ini, German Chancellor Friedrich Merz did promise an autumn of reform, and maybe now we're beginning to see some of that. This week, the ruling coalition of conservatives and social democrats managed to agree on 3 pieces of reform, and one of them was the conversion of the so-called citizens' income into basic income support for people, but with more restrictions. And the hope there is that the government can save money by spending less on welfare, by getting more people back into work if they can. And the government also wants to encourage retirees to remain in the workforce by offering pensioners who choose to work a higher tax-free income. On Thursday, of course, yesterday as well, the government did announce plans to spend 3 billion euros until 2029 to incentivize people to buy electric vehicles. So that is something for industry to help the country's auto industry, which has been struggling to keep up with cheaper Chinese competition in the EV segment. So that's 3 pieces of reform announced this week. So maybe there is hope here in Germany that there's more to come.
Yeah, it's a reforms world now, Chip, because even here in Nigeria, it's reforms, reforms, reform. But, what the people will wait for is the result and the impact of the reforms. And we'll keep watching. Thank you so much, for taking us back there to Germany. And do have a great weekend, Chip.
Likewise, Ini. Thank you.
Let's switch a bit to crypto now and see what's happening there. We see a color red, but not very different from what we had at this time yesterday, even though I think yesterday we had 122,000 level, but we're now at 121,534.26 after I lost about 1.67% in 24 hours. Talking about Bitcoin. Ethereum has a lot of things going on around there. We'll tell you about that during the headlines. It's sustaining the 4,000 level, but it's lost some hundreds, not up to 1,000, hundreds of dollars, 1.5% down. XRP is in the red. Solana, TRX, Cardano, BNB. So it's a red Friday for the crypto investors, so maybe a little bit of patience, and it's the market that never sleeps. Perhaps the weekend can bring a bit of recovery. But let's see the stories making the headline, and the first has to do with Ethereum, because the co-founder, Vitalik Buterin, is dumped new meme coin batch for Ethereum, and Ethereum co-founder sold a fresh batch of newly airdropped meme coins, converting them into about 22.14 Ethereum. That's worth about 96,400 according to on-chain data. The sale, which included tokens such as Duma, Giga, and Memai, they underscore Buterin's ongoing trend of offloading speculative assets in favor of Ethereum. And perhaps that's part of what is helping Ethereum sustain the 4,000 level. It seems permanent now, because we've seen it hold on to that for weeks now. Other than that, we have Bybit obtaining a full virtual asset platform, VAPO, the license from the UAE Security and Commodities Authority, and they've become the very first global crypto exchange to receive federal approval in the country. Also, Coinbase and MasterCard, they are competing to acquire a London-based stable coin infrastructure startup. It's BVNK. I wonder who would win. And in a deal that could value the company between $1.5 billion and $2.5 billion, they're looking at this. If finalized, the transaction will represent a landmark move in the stablecoin space and underscore the growing race between crypto and traditional finance to control the next generation payment rails. I wonder who would win, but whoever wins, it does seem that stablecoin has come to stay, gaining grounds in different parts of the world, at different pace, but, stablecoins is here. But those are the top stories for this afternoon from the crypto space, and that's where we would end Business Incorporated. Thank you so much for being a part of the program all through the week. Next week will bring you fresh episode of both Business Morning and Business Incorporated. Always remember that you can watch our programs whenever you want on our YouTube channel, both Business Morning and Business Incorporated. So I'll see you tonight for the stock market report. Hopefully, the Nigerian stock market would have recovered by the close of trade. I'll give you the details at 10. I'm Ini John Mekwa. Bye-bye.